Welcome back to another roundtable. My name is Adam. With me once again, I have Rusmin and
Hello.
Victor.
Hi everyone.
And today we're going to talk about bonds and specifically Singapore savings bonds. So I think this is a pretty interesting time to have a look at bonds because interest rates are going up and bonds are something where you can basically lock in those interest rates in a way, right?
Yep.
Yeah.
All right. So we want to have a look at Singapore savings bonds, which is issued by the Singapore government.
Yep.
All right,
Yeah.
so AAA rated and all that. And the current, as of this recording, when we're looking at the Singapore savings bonds, the issuance that's coming out, the headline interest rate is 3%, which is pretty attractive.
Yep.
I have not seen that ever in my life.
Yeah, I think since the very first issuance of SSB in 2015, I think this is probably the only time that we are seeing the highest. Like possibly the next issuance could be higher because
higher,
interest rates
yeah.
are going up. Yeah, but we are at an all-time high.
Yeah,
So you
and
can
I
say
think
that.
a year ago I was looking at it because I was doing some research for bonds. I think it was like 1%.
Yeah, you'll
Yep.
be
Something like
disappointed.
that. Yeah, I was like, oh, I'm not putting my money in that. But at 3%, for something that's practically essentially risk-free,
Yeah.
I think there's something that we could explore for if you want to like diversify your assets in a way.
Yeah.
All right, so let's have a look at quick update of the SSB that's coming up. So when talk about the interest rates that the headline figure is 3%. Is that what you're gonna get?
Yeah, so that would be the compounded figure if you were to hold the SSB all the way until the 10th year.
10th year,
Yeah, correct. But of course, your first year, second year, third year is like 2+% and all this.
All right. But if you hold it all the way, it's compounded at 3%.
It's 3%,
All
yes,
right.
correct.
Okay.
Effective interest rate is about 3%, right? Then there will be a step up 2%. Next year will be 2.8, and the following year will be 3%.
Yeah. So it starts off lower, and
Yeah.
then the longer you hold it, you earn a
Yeah.
slightly higher interest rate along the way.
Correct.
Yes. Yeah.
And then overall, it averages out to 3%.
Correct.
Yes.
Right.
And you get paid, I think, once every 6 months. Okay.
Okay.
So, the next payment is going to be on the 1st Feb 2023.
Okay.
Yeah.
So I think the natural question when it comes to Singapore savings bonds is that you typically compare it to fixed deposits.
Yes, correct.
Yeah.
So what are the fixed deposits right now?
I think before we talk about the fixed deposit, you need to get some pros about the Singapore saving bond. Is first, like what you mentioned, is backed by Singapore government. They protect your downside because usually when the bond price, when the interest rate go up, the bond price will drop, and that's where the yield will increase, right? But in this case, right, the Singapore government protect your capital base.
So no matter what, even if
Yes.
the prices interest rates go up, you
Yep.
can always redeem it at par.
Yes, correct.
Right.
So that is basically the advantage of Singapore saving bonds. Okay, so if you were to look at the lockup period between the Singapore saving bonds and fixed deposit lockup period is between 12 to 36 months. Okay, so what I did is I go and see all the different banks in Singapore, and this is the low and the high.
Mm-hmm.
So it's between 12 to 36 months. For Singapore saving bonds, right, there's no lockup period, right? There's only after you want to redeem, you can redeem it after 1 month,
All
right?
right.
And you just have to wait 1 month to get everything back and all this, right? But you can invest all the way up to 10 years.
Okay.
Okay, and the interest rate for the fixed deposit, since they're only 12 to 36 months, right? The interest rate is between 1.3%, the low, to 2%. Okay, so I'm going to take the same thing for the Singapore saving bonds in terms of the compounded basis, right? Your interest rate between 12 to 36 months is between 2% to 2.63%. So basically, right now, right, Singapore saving bonds is much higher than your fixed deposit, right? And of course, Singapore saving bonds has a minimum deposit of 500. But if you were to put in the fixed deposit, it's about 1,000 to 30,000, depending on which bank you're looking at. Okay, but the limit about Singapore saving bonds is that there's a maximum deposit. You only can go up to 200,000.
All right.
Whereas your fixed deposit, there's no limit.
Okay.
Right.
A problem to
If you're too rich, yeah, it's
Yeah.
like this is I can't because I think the government knows what they're offering here,
Yeah.
and they're
Yeah.
trying to like
mass market.
it's for
Yeah.
everyone, every citizen.
Correct.
Yeah.
Okay, so the next part is the best part, where you have a premature redemption,
Yeah.
right? So for Singapore saving bond, no penalty, right? But for fixed deposit, there's penalty.
Yeah.
So literally, you can just park your money in the Singapore saving bonds. As much as they say they pay out 6 months, if you were to take out before the 6 months, right, they still prorate the returns for you.
All right. So basically, there is no penalty for the Singapore savings
Yes,
bond,
correct.
right? It's just like you can put it in, take it out anytime you
Yep.
want within that month, because I think there are windows within each month. And even if you do, there's a prorated interest of how much you've had
Yes, correct.
held on to it. Yeah.
So basically, we are talking about the August 2022 issuance, right? So
Okay.
there's a calculator that I think you can go to MS website, Singapore Saving Bonds Calculator, where you key in the amount, and then you show you a list of the amount that you're going to receive over the next 10 years. Okay, you start off with, let's say you put in 10,000, you start off with $200, and then you step up to 270, 280, and then you just keep on going up.
All right.
Yeah.
So if you compare everything, it just looks like Singapore savings bonds, they're superior to fixed deposits at this point in time.
At this point in time,
Higher
yes.
interest rates, no penalties, take
Yeah.
out anytime you want, still prorated interest, and backed by the Singapore government. All right.
Yes,
So, I mean, if you want to look at fixed income securities,
Yep.
this will definitely be on someone's radar, right?
Yes,
Yeah.
yeah.
Alright.
If you want to have, no drama, very safe,
Yeah.
you just want your 3%.
Yeah.
This is it.
All right.
Right.
So I think the question is because, I mean, the reason why we're discussing this in the first place is because interest rates are going up.
Yep.
Yeah.
So we expect, or the world expects, interest rates to continue rising. So how would that affect your Singapore savings bonds? Because typically, if interest rates go up, bond prices come down.
Yeah.
So what happens here with Singapore savings bonds?
Yeah, so like I mentioned, your capital for that is protected because it's
Okay.
backed by the Singapore government. So there's no fluctuation in the bond price.
You always redeem it at
You're
par.
always within your original capital.
Yeah.
Then after that, you can tabulate together with all the interest that you collected,
Okay.
right?
Yeah.
But of course, with rising interest rate, you can expect that the following months SSB going to be a much higher yield, right?
Okay. Yeah.
so
I think that's the
thing.
attractiveness of waiting a bit more. So,
Right.
because Nick, it could be like 3.2
Yeah.
for next month. Who
I don't
knows?
know. Yeah, we don't know.
We
Who
have no
knows,
idea,
right? So,
yeah.
and Fed is going to convene a meeting in July, right? So, probably we'll have done it.
Yeah. So I think the July Feb, I think there's very high probability they're going to raise the interest rate because the inflation is not going
Mhm.
down yet, right? So if they were to raise the interest rate again, then the next SSB, there's a high probability that it's going to be a higher yield.
So what
Right.
would you do? Would you so what's the strategy here? If you're interested in Singapore savings bonds, so someone's watching this, hey, I want to put some
Yep.
money with the Singapore savings bonds, and 3% looks attractive, but next month could be higher. So what do I do?
Yeah, so I think for people who are waiting or they want to wait for the next batch and then they will subscribe, my thinking is that you better start now, right? Because when you talk about 700 million allocation only to the mass market, that's a big sum, but it's when it breaks up or divided by so many people, the quantum can get smaller and
So you're
smaller.
saying you won't get your full allotment?
Yes,
you have to-
even
Yeah.
if you have 100,000 lying around, you apply for it, I don't think you'll get 100,000 allotment, right?
And
So-
of course, with everybody looking at the interest, the 3% and say, wow, risk free.
Risk-free,
Yeah.
Everybody
yeah.
just rush go.
Yes.
Yeah.
So my take is start now, right? And
Okay.
you don't want to wait for next month. Next month you could wait, but then you may not get full allocation.
Yep.
Yeah,
And
you
if it
don't know
goes
how
higher,
this
the
long.
demand could go even higher, right? So people are going
Yes,
to go like,
right.
wow.
Oh yes, there will be more
Yeah.
people applying. I think the
Yeah.
following next.
So you
month
would say
issuance.
you kind of like stagger your investments, like stocks,
Yes.
right? You kind of like put it in tranches.
Yeah. Yes. Yeah.
So you put some now.
Yeah.
And
Anyway,
then-
your base interest is 2%, right? So I mean, what could
for year one, right?
what could go wrong, right? Without any risk here.
All right. So, but what if you're also looking at stocks? I mean, not just everyone looks at bonds. How would you compare it to like equities?
Yeah, so I actually went to screen out the Singapore Stocks Exchange, right? They have roughly about 682 stocks. So out of the 682 stocks, right, 328 of them are paying dividend, right?
Mhm.
So the average yield is about 5.5%, right?
Okay.
And if you were to look at the STI ETF in terms of the SPDR issuer, it's about 3% dividend yield. If you were to look at the Nikko AM issuer, right, it's about 3.3% dividend yield. So right now, and this yield are based on the current, right?
Yeah.
So the current yield is much higher than the yield of the SSB based on the 1 year price,
Yeah.
right? So the stocks generally in Singapore now, right, is actually still much more attractive to invest in as compared to the SSB. But there, of course, there's a risk of volatility. Right?
All right.
Yeah, I mean there are some people that I know that no matter what you tell them about stock market, bear market, no time to invest. Okay,
Yeah.
but they never take action. Okay.
Or they can't stand investing
Yep.
in the bear market. It's just
yeah.
like, because they're just
Yeah.
afraid, right?
Yeah, so I think from there I can kind of tell that their risk appetite. Right?
Yeah.
They actually have very low appetite when it comes to investing in the stock market. Okay, so for those people, I think this is basically the best instrument for them right now because there's totally no volatility that we are talking about here.
Mhm.
So I think it's time for them to actually look at, right, pay attention, and then instead of parking their money in the bank, earning pathetic interest rate,
Mhm.
right, they can simply put it here, and in the future, if they need it, they can always withdraw it,
All
right,
right.
without
Yep.
any penalty, and they still get to enjoy the interest rate.
Yep. So
Yeah.
I think at the end of the day is like what Rusmi has said is the risk appetite. Another thing I would say is the opportunity cost, right?
Yeah.
So right now, if you were to look at the markets around the world, it's generally we are more in a bear market, right? Except for Singapore, it's still holding down there, but it's not really at the bear, but it's also not at the high, right? So it still makes sense for me. It's in my own opinion that it still makes sense to be in the stock market because it provides a better yield out there, better opportunity out there. Okay, but of course, in the event where the stock market is in a very high valuation, right, and the interest rate is very high, and then you have a SSB that is very high yield, then it makes more sense to go over to the SSB and park your cash over there and wait, possibly if there's a possible crash moving forward. So I think that's the best scenario.
So you're basically looking at the opportunities between both markets,
Yes,
like
correct.
bonds and stocks, and
Yes,
you just
correct.
kind of decide where you want to play.
Yeah.
So at this point in time, you feel that there are opportunities to pick up stocks at good prices
Yep.
because it's a bear market.
Yeah.
Yeah.
Yep.
So there's always a secret stash that sometimes people keep, right?
Yep.
And this is the place to put.
Where is
Right.
your secret stash?
Oops.
I don't have a secret stash. He has a secret stash.
Yeah, I mean,
Some people I know. That
I think some people they have all those like emergency
Okay.
funds and all this,
Yeah.
right?
Okay.
So all these emergency funds, you can put it in the SSB because you are not going to use it,
Okay.
Yes,
right?
yeah.
And within 1 month you can take it back already. So
Yeah.
there's not much of a.
But we
worry.
have to point out that this is not instant liquidity because if
Yeah.
it's in your bank, it's instant liquidity.
Yes.
Yeah.
There's a window for the
Yes,
SSB.
yes, yeah.
There's this
Yeah.
there's this
1
1
month.
month thing. So
Yes,
it's like if you're near to that window, you just wait for a few days.
Yeah.
Yeah.
It comes out. But if you like miss that window, you got to wait for the following month.
Yes,
Yeah.
correct.
Just we want to point that out. If you think this is instant liquidity, yes, there are no redemption. There's no penalty and all that. You can take it out,
Yeah.
but it's not
You
instant.
can offset the requirement using your credit card, right? 30 days.
I mean, if that
If you
particular loan shark accepts credit card, for example, right? I don't know if you.
Yeah.
I mean, cash is cash, right?
Yes,
Yeah.
yes, true.
So
yeah.
it's not instant liquidity. Just want to point that out. But in a sense, it is one of the best money market instruments, if I put it that way,
Yes, correct.
on the market.
Yeah.
I mean, 3%.
Yeah, when the government came out this SSB, I was like, wow, this is a good instrument.
Yeah. So, I mean, would you say, like, even as a stock investor, if you have cash that you're lying around, would you put it in the SSB as a way to
I
wait?
would. I would.
You
I
would,
would.
but
I
there's that redemption period because, like,
Yes.
if there's a stock you want to buy and you don't redeem it in time,
Yeah.
there's this.
Correct. Yeah. I
There's
mean,
that
if this
risk.
happens during the COVID where the sell-down was very quick,
Yeah.
it would be a setback. Right?
Yeah.
But I think that at the current crisis, I think we are looking at a very slow and steady
Yeah,
decline.
Okay.
So
Yeah.
I mean, there's no hurry. I mean, we are not in the big bear market. Like
Okay.
big crisis.
Yeah, anyway,
Yeah.
COVID is a very special crisis.
Okay.
Right.
So
Alright.
yeah.
So I think this is a pretty good summary
Yep.
of Singapore savings bonds. I think we've always covered. I mean, we've always had a look at bonds from Singapore savings bonds time to time
Yep.
Yeah.
because of the flexibility that it gives all of us. But the interest rates were never attractive until
That's why we don't want to
until
talk
now.
about it.
Yeah. So 3%. I mean, if you're considering this, especially if you have a basket of instruments that you want to just diversify across, and this is one area you want to look at, I think you can consider Singapore savings bonds. Again, not a recommendation to buy or sell anything. It's really up to you whether this suits you and your risk profile. All right. So I think that's pretty much it, right, guys?
Yep.
All right. So thank you so much for watching this roundtable. So once again, my name is Adam. That's Rusmin.
Thank you.
And this is
Thank
Victor. If you enjoyed this roundtable about bonds and Singapore savings bonds, please hit the like button. Any questions about this, put them in the comment section. We'll help you answer them. And of course, subscribe to our channel. Many more roundtables coming up, and we'll see you around.